We are going to learn something about production budget. What is first of all production budget? Try to concentrate. Say today's date is 1st 2021. 1st January 2021. My next 3 months are January, February and March. I want to decide that how many units I will be producing in January, in February and in March. So what is my question? Units to be produced or manufactured in January, February and March. Of course, I will be forecasting on some logical basis. This forecasting of how much production I will be making is termed as a production budget. Now, how to find out how many units I will be manufacturing in January, February and March? So, how much selling is required in January? Concentrate. How much selling in terms of units is required in January? That many number of units I'll have to manufacture plus closing stock I want at the end of January. So if I want to say sell 1000 units and I want to keep a closing stock of 1100 units, I will have to manufacture 1100 units. If I want to sell 1000 units, keep a closing stock of 100 units, I'll have to manufacture 1100 units to sell 1000 and to keep in stock 100 units. But I might be already having some stock at the beginning of the January. Say I am already having 300 units of stock at the beginning of the January. So out of 1100, already I am having a stock of 300. I'll be ultimately manufacturing how many units? 800 units. This will be my production. So how to find out number of units to be manufactured in a month or in a year? It is very simple. My sales units plus closing stock minus opening stock will give me the answer of units to be produced. If it is month in current month, if it is a year in current year. Let us take a small example and find out how we'll be calculating production budget. Since all answers are in units, we are trying to forecast how much production will be made in January, February and March. What we'll be doing? What is the forecasted sales units? Sir, this is actual units or forecasted units? These are forecasted units because you are forecasting everything. What closing stock you require at the end of each month minus opening stock. I will be getting answer of production required in that particular month. So let me take some figures. Say sales in January is required by 1000 units. Closing stock required is 100 units. Already you are having 200 units in opening stock. You will be manufacturing 900 units. Now what you will do? You are already having 200. You will be manufacturing 900. So now you will be totally having 1100, out of which you will be selling 1000, and so you will be having 100 units as closing stock. Closing stock of January will become opening stock of February. In February, you need to sell 1500 units. You require a closing stock of 200 units. How much you will be manufacturing? You will be manufacturing 1600 units. Now you are having opening of 100. You will be manufacturing 1600. So totally you are having 1700, out of which you will be selling 1500 units. So ultimately what will be in closing stock is 200 units. Closing stock of February will become opening stock of March. You want to sell only 1200 units in March because of some reason in March the sales is lower. and you want a closing stock of 400 units. So you will be manufacturing 1400. What you will do, your opening balance is 200, you will be manufacturing 1400, so your total manufactured goods will be 1600, out of which you will be selling 1200 units, so your closing stock will be 400 units. This is how you budget, and try to understand budget is always a forecasting. So you are forecasting that your sales will be this, you will require closing stock of this, and hence you are forecasting your production. We'll be also learning purchase budget. Purchase of raw materials budget. Now see, the concept remains same. What is your requirement for production? Here there will be not sales because you don't sell your raw materials. What is required for production? How much raw material consumption is required? So consumption of raw material required in say month of January, plus what closing stock you want of raw material. Please understand, this will be of raw material and not of finished goods, obviously. This is what is a total is my requirement minus opening stock of raw material. I will be manufacturing, no, I will be purchasing this many raw materials, and all answers are in units. So the same concept, just the sales is replaced by consumption and the production is replaced by raw material purchase. This type of budget is known as a raw material purchase budget. Let us take a previous example only, and let us assume that for 1 unit of production 3 kgs of raw material will be required. So let me see what was production required in our 900, 1600 and 1400. Production required was 900, 1600 and 1400. So what will be raw material required? Raw material consumption requirement. It is 2700 kgs. Now it will be kgs, right? This will be 4800. This will be 42. 100. These are kgs. So this much raw material will be required to manufacture 900, 1600 and 1400 units respectively. Now we will be talking only about raw material. This is my consumption requirement. So this much raw material I want, plus I will require what I want to keep it in closing stock. Say closing stock 300, 200 and 800 is required, and those are kgs now, because we are not talking about finished goods, we are talking about raw material, minus opening stock which is already in my go down, which is 400, which is 300 and which is 900. So how much raw material I will have to purchase? I will have to purchase 3000 minus 400 is 2600 kgs. So I am not manufacturing, I'll be purchasing this. This will be 4700 kgs, and this will be 4100 kgs. This much amount of raw material is to be purchased. Now, if you want to forecast what raw material you will have to purchase in January, February and March, this is how you find out how to forecast your purchase budget of raw material. Let us understand now concept of flexible budget. What is concept of flexible budget? Please try to concentrate. Say a manufacturing unit is having a total capacity of 10,000 units, and this I will be terming it as 100% capacity. But right now it is working only at 60% capacity. So it is manufacturing and selling only 6,000 units. So it is actually working at 60% capacity. And so it is manufacturing and selling 6,000 units. And at 60% capacity, the data is given. Units sold will be 6,000 units. Also, sales is given. Sales is at the rate of rupees 100. So it will be 6 lakhs units. Minus variable cost is given at the rate of rupees 40. So it is 2,40,000. What will be your contribution? What is contribution? Sales minus variable cost is your contribution. This is 3,60,000 is your contribution. Minus fixed cost is say 2 lakhs. What is profit at 60% capacity is 1,60,000. Now, in next year, you are expected to work at 80% capacity. And you as a financial manager or as a cost manager told to prepare a budget of your revenues and your profits at 80% capacity. Now, this will be regarded as a flexible budget. How we will do it? At 80% capacity, I will be selling 8,000 units. Because 100% capacity, I will be selling 10,000 units. 80% at 8,000 units. My selling price, if it is given, it is changing, that I will be changing it. Otherwise, I will be keeping as it is, which is 8 lakhs rupees. Variable cost, if it is given, it is changing, then I will be changing it. Otherwise, I'll be keeping it as it is. It is 3,20,000. This will be 4,80,000. See, variable cost is proportionate to sales because this is the nature of variable cost. It increases with increase in units sold. It decreases with a decrease in units sold. Fixed cost, what is nature of fixed cost is it remains a fixed whether you increase the production or decrease the production. So fixed cost is going to remain same, which is 2 lakh. So your profit will be 2,80,000. This is flexible budget. What will be cost, revenue, variable cost, fixed cost at 60% capacity, and you are told to forecast at 80%, 90%, 70%, 50% capacity. This will be regarded as flexible budget. Let's solve some of the questions of budgeting. First question is C15.1. XYZ Limited is drawing a production plan for two products, product XML and product YML. The company's policy is to maintain closing stock of finished goods at 25% of anticipated volumes of sales of succeeding month. So if in next month you are going to sell 1,000 units, you will be keeping 250 units in closing stock of previous month. This is what is given. The following are the estimated data of two products. Budgeted production per annum is given. So this many total units you are going to manufacture. And YML also it is given. Direct material per unit, this is cost given. Direct manufacturing expenses are also given. The estimate units to be sold in the first 4 months of the year are as under. So let us first concentrate only on XML. It is product XML. particulars. I want to find out answer for production budget month-wise, production cost budget for the first quarter of the year. So I will be preparing for a particular quarter, that is April, May and June. It is April, May and so what is the sales unit in April, May and June? It is 8,000, 10,000 and 12,000. 8,000, 10,000 and as I told you, how to find out how many units you will be producing? Sales units plus closing stock minus opening stock plus closing stock. Now, how much closing stock you are going to keep? Closing stock of finished goods at 25% of anticipated sales volume of the succeeding month. So what closing stock you will be keeping in April? That is 25% of May, which is 2,500. 12,000 into 25% is 4,000. 3,000. And for June, we will have to take sales of July. So only sales of July is given. Sales of July will be 16,000 and 25% will be 4,000. So closing stock will be minus opening stock. Now, closing stock of April will become opening stock of May, right? Closing stock of May will become opening stock of June. How to find out opening stock of April? For that, can I do this? What would be closing stock of March? Closing stock of March would be 25% of this. So 25% of this is 2,000. It will not be negative in this month. I'm not preparing whole budget for the March, but I want closing stock of March so that I can get opening stock of April. So closing stock of March is 2,000 will become opening stock for April. So I've got this production budget. Now it is just totaling out of all 3 months. This is 10,500. This will be 8,500 units. Production to be made in April. 13 that this will be 10,500. Production to be made in May. And 17 minus 3 is 14. 16 minus 3 is 13. $13,000 units will be manufactured of XML. We need to also find out for another units YML, but first understand, let us find out the answer. Production budget months wise. Production cost budget for first quarter. So a quarter one is April plus May plus June. What production you are going to make total of all this? That is 8,500 plus 10,500 plus 13,000, which is 32,000 units. What will be production cost? Because they want also cost budget. So you will be purchasing direct material per unit at 220. So your cost will be direct material 32,000 into 220. Direct labor 130. Direct labor will be 32,000 units into 130. And you will be having manufacturing overhead. Now please understand, our overhead chapter is pending, but it is very easy in this case, so let us understand it. What will be your total manufacturing cost? 4 lakh. Manufacturing cost is manufacturing overhead. And what is your budgeted production units? 2 lakhs. So for each unit produced, you will absorb 2 rupees. How 2 rupees? 4 lakh total cost is to be absorbed over 2 lakh units. Then for 1 unit, you will be absorbing 2 rupees. So for 32,000 units, you will be absorbing 2 units per units. 2 rupees per units. Your total answer will be 32,000 into 220, which is 70 lakh 40,000. 32,000 into 130, it is 41 lakh 60,000. And 30, this is 64,000. My total cost of production in first quarter will be 70 lakh 40,000 plus 41 lakh 60,000 plus 64,000, which is 1 crore 12 lakh 64,000. 1 crore 12 lakh 64,000 rupees will be total cost to manufacture the goods, that is 32,000 units in your first quarter. Next product is a product YML. So product YML, again I need to do particulars. April, May and June. Sales units are already given in the question, which are 6,000, 8,000 and 9,000. Sales units are 6,000, 8,000, 9,000. 6,000, 8,000, 9,000 units. Sales plus closing stock minus opening stock will be production. Sales plus closing stock minus opening stock will be nothing but production required. What is closing stock pattern? It is 25% of sales of next month. So next month sales is 8,000. My closing stock of April will be 2,000. Next month sales is 9,000. So my closing stock of May will be 9,000 divided by 4, which is 2250. My July sales is 14,000. So my closing stock of June will be 14,000 divided by 4, which is 3,500. Closing stock of April will become opening stock of May. Closing stock is added, right? Incorrectly written subtraction sign. Opening stock is deducted. Closing stock of May will become opening stock of June, 2250. Now, what would be closing stock of April? Closing stock of March will be 25% of 6,000. So it would be 6,000 divided by 4, which is 1,500. If closing stock of March is 1,500, opening stock of April will be 1,500. I can find out what will be my production in April, May and June. This is 8,000 minus 1,500 is 6,500. 10,250, this will be 8,250. 12,500 minus 2250. 10,250. What is the total production I'll be making? Is 6,500 plus 8,250 plus 10,250, which is 25,000 units. I need to also prepare production budget in rupees. So production budget in rupees for manufacturing 25,000 units of YML in first quarter. How many units I am going to prepare? 25,000. What will be material cost? 25,000 into 280. Labor cost will be 25,000 units into 120. And manufacturing cost I'll be finding out in same manner. Total cost is 5 lakhs. Number of units totally to be manufactured in a year is 1,50,000. So my cost per unit will be 5 lakh divided by 1,50,000, which will be 5 lakh divided by 1,50,000, which is 3.33. How many units I am manufacturing of YML? 25,000 into 3.33 will be nothing but my manufacturing cost. I need to find out 25,000 into 280, which is 70 lakhs. 25,000 into 120, which is 30 lakhs. And 25,000 into 3.33. 83,250. Total will be 1 crore 83,250, which is nothing but my total cost of manufacturing 25,000 production units, which I'm going to produce in April, May and June in total. This is in rupees. This is in units, production budget and rupees production budget. Let us do second question, which is C15.2. AK Limited produces and sells a single product. Sales budget for calendar year 2012 by quarter is as under. So this is your sales budget. In first quarter, you are going to sell 18,000, 22,000, 25,000 and 27,000 respectively. The year is expected to open an inventory of 6,000 units of finished goods and close with the inventory of 8,000 units production. 8,000 units. The production is customarily scheduled to provide 70% of current quarter sales demand plus 30% of following quarter's demand. The budgeted selling price per unit is rupees 40. The standard cost details of 1 unit of product are as under. So cost detail is also given. Variable cost 34.50 and fixed overhead 2 per hour based upon 1,10,000 labor hours for the year. Fixed overhead are evenly distributed during the year is not much important. So 4 quarters is per annum, even fixed cost is given per annum. You are required to prepare quarterly production budget for the year, ascertain in which quarter of the year company is expected to achieve break-even point. Now, let us prepare production budget in units for all 4 quarters. Production budget in quarter 1, quarter 2, quarter 3 and quarter. This is particulars. How we find out our production is the sales in units plus closing stock minus opening stock. The answer will be nothing but production. Let us understand which information is given. Sales expected in units is given 18,000, 22,000, 25,000 and 27,000. 18,000, 22,000, 25,000 and 27,000. What will be closing stock is given? No, the year is expected to open with an inventory of 6,000 units. So opening stock of quarter 1 is given, which is 6,000. And close with the inventory of 8,000 units. The year will close with the inventory of 8,000 units. So closing stock at the end of 4th quarter will be 8,000 units. This two information is given. Even production information is given. What is production information? The production is customarily scheduled to provide 70% of current quarter sales demand plus 30% of following quarter demand. So how much production you will be doing it in first quarter? Try to concentrate. 70% of 18,000, that is current quarter's demand, plus 30% of next quarter's demand, which is 22,000. So how much sales you will be doing is 18,000 into 70% is equal to M plus, and 22,000 into 30% is equal to M plus. MRC is 19,200. So in first quarter, you will be doing production of 19,000. This is your pattern. Current quarter's sales multiplied by 70% and next quarter sales multiplied by 30% is the production which you do. I can find out the production of all the quarters except quarter 4. Quarter 2, my production will be 22,000 into 70% plus 25,000 into 30%. In quarter 3, 25,000 into 70% plus 27,000 into 30%. In quarter 4, I cannot do it. Why? I can do 27,000 into 70%, but I don't know next quarter's sales, right? Because the year is ending. So I cannot find out for quarter 4, but for quarter 2 and 3, I can easily find out. So let us find out for quarter 2. 22,000 into 70% is equal to M plus 25,000 into 30% is equal to M plus. MRC is 22,900. This will be 25,000 into 70% M plus and 27,000 into 30% is equal to M plus. So MRC is 25,600. So let me calculate my production budget. In quarter 1, I can easily find out my closing stock because that is the only missing figure. So it will be 19,200 plus 6,000 minus 18,000. 7,200. You can just verify whether my answer is correct or not. 18,000 plus 7,200 minus 6,000 should be 9,200. Closing stock of quarter 1 will become opening stock of quarter 2. 7,200. I can again find out closing stock of quarter 2. How I will be finding it out? 22,900 plus 7,200 minus 22,000, which is 8,100, which will again become opening stock of quarter 3, 8,100. Again, quarter 3 closing stock will be 25,600 plus 8,100 minus 25,000, which is 8,700, will become opening stock for quarter 4. And so I will be also getting production of quarter 4, which will be is equal to 27,000 plus 8,000 minus 8,700. That is 26,000. And this is how I have got production budget. What was given? Opening stock and closing stock of the year was given and production pattern was given. I got answer of production budget. Next is ascertain in which quarter of the year the company is expected to achieve break even. What is my selling price per unit? Selling price per unit is rupees 40. Variable cost per unit is 34.50. Variable cost per unit is 34.50. I will be getting contribution per unit, which will be is equal to 5.50 rupees. My fixed cost. Now understand, some details over here are given, that is 2.5 years. I think it is some mistake which is given. It is 2 per hour of 1,10,000 labor hours. So per annum, my fixed cost will be 1,10,000 labor hours multiplied by 2 absorption rate, which is 2,20,000 rupees. How to find out break even point in rupees? Break even point, sorry, in units is fixed cost upon contribution per. A simple formula for marginal costing: 2,20,000 divided by 5.50. I will be getting break even point 2,20,000 divided by 5.5, which is 40,000 units. 40,000 units will be my break even point. What is break even point? Is a unit sold at which I will be having no profit, no loss. They are saying in which quarter you will attain break even. In first quarter you are selling 18,000 units. In second quarter you are selling 22,000 units. This is in first. This is in second. So total units in 2 quarters you will be selling is 40,000 units, which is your break even. So on completion of second quarter, you will achieve break even. Now understand, in suggested answer they have given and they have compared production, that okay, production 40,000 you will be completing in second quarter. But understand, break even point is always quantity sold at which you are earning no profit or no loss. If you want to find out quantity manufactured at which you are earning no profit, no loss, you can take this as a manufacturing, right? So you should be, break even point is always unit sold at which you are earning no profit, no loss. So you should compare. If someone asks you in how many quarters you will be manufacturing your break even quantity, which is 40,000 units, then you will be manufacturing something in second quarter. Second quarter you will be completing manufacturing of 40,000 units. We are going to start with 5.3. See 5.3. An electronic gadget manufacturer has prepared the sales budget for next few months. In this respect, following sales figures are available. So electronic gadget sales, in January it will be 5,000, February 6,000, March 7,000, April 7,500 and May 8,000. To manufacture an electric gadget, a standard cost of 1,500 is incurred and it is sold through dealer at a uniform price of 2,000. So what is cost of manufacturing this gadget? 1,500. And what is its selling price? 2,000. Dealers are given a discount of 15% on selling price. Alright, so your selling price will be reduced by 15%. Apart from other materials, 2 units of batteries are required to manufacture a gadget. So batteries will now become my raw material. I use 2 batteries to manufacture one electronic gadget. The company wants to hold a stock of batteries at the end of each month to cover 30% of next month production and to hold a stock of manufactured gadgets to cover 25% of next month's sale. 3,250 units of batteries and 1,200 units of manufactured gadgets were in stock on 1st January. Prepare production budget in units for the month of Jan, Feb, March and April Production budget in units. Production budget is always of finished goods. Prepare purchase budget for batteries. What are our batteries? They are raw material for the month of January, February and March. So raw material budget we want to prepare only for Jan, Feb and March. Calculate profit for the quarter ending on the March. This will be doing last. Calculate the profit for the quarter ending on March. We are first learning production budget of Jan, Feb, March and April. Let us do this. Production budget, it is of finished goods. In our case, it is right now electronic gadgets. I want to prepare of Jan, Feb, March and April. How I prepare my production budget? Sales in units plus closing stock. This much unit I will have to manufacture minus opening stock. This much less unit I will have to manufacture because they are already there during the current month. Let me first see the things which are available. Sales is available 5,000 units, 6,000 units, 7,000, 7,500. So it is 5,000, 6,000, 7,000 and 7,000. This will be my production required. To manufacture, this is a standard cost, that is all right. Apart from other materials, 2 units, this is for battery. The company wants to hold stock of batteries. We are right now not doing about batteries, we are doing only about finished goods. Next month production. And to hold stock of manufactured gadgets to cover 25% of next month's sales. Try to concentrate on this. You keep closing stock of current month to cover 25% sales for next month. So in January, what will be your closing stock? 25% of sales of February. What is sales of February? 6,000. 25% of 6,000 will be 6,000 divided by 4, which is 1,500. How I did this? 6,000 multiplied by 25%. Why? It is written that finished goods, what closing stock you keep so that you can cover 25% of next month's sales. How much will be closing stock in February? 7,000 multiplied by 25%. 1750. What will be closing stock for March? 7,500 divided by 4. 1875. What will be closing stock of April? For that I will need sales of May. Sales of May is 8,000 and 8,000 divided by 4 will be 2,000 will be closing stock of. What will be opening stock of February? Opening stock of February will be 1,500. Opening stock of March will be 1750. Opening stock of April will be 187. Closing stock of February will become opening stock of March. $1,200 units of manufactured gadgets were in stock on 1st January. So what is opening stock as on 1st January? It is 1,200 units. This is 1,200 units. My all the figures are filled up. I can find out how many electronic gadgets I will be manufacturing in January, February, March and April. So it is 6,500 minus 1,200, which will be 5,300. This is 7750 minus 150, 7750 minus 1500, 6250. This is 8,875 minus 1750, 7125. This is 9,500 minus 1875. 7625. This is nothing by production budget. Please tell me whether it is I am manufacturing batteries or I am manufacturing electronic gadgets. I am manufacturing electronic gadgets, and batteries are my raw material. Batteries are my raw material. Next, I will be preparing budget for batteries. Now I cannot say production of batteries because I am not producing batteries. So it is a purchase budget. It is regarded as purchase budget. And I don't know why, but they have told me to prepare only of Jan, Feb and March. Alright. How many electronic gadgets I am manufacturing in January? 5,300. How many electronic gadgets I am manufacturing in Jan? 5,300. How many batteries are required to manufacture one gadget? 2. It is written to, apart from other materials, 2 units of batteries are required to manufacture a gadget. So how many batteries will be required? Batteries will be required to produce, that is multiplied by 2, 5,300 multiplied by 2 is 10,600. In February, I will require 12,500. How? 6250 into 2. This will be 7125, 14,250. This many batteries will be required in Jan, Feb and March. But there will be closing stock of batteries also. So that many batteries I will have to purchase more. Minus there will be opening stock of batteries. So this many batteries I will have to purchase less. And so this is known as purchase budget. Your consumption required for raw material plus closing minus opening will be your purchase figure. This much raw material you will have to purchase. Let us see what figures are given. 3,250 units of batteries are opening. 3,250 are opening. The company wants to hold stock of batteries at end of each month to cover 30% of next month's production. So closing stock will be 30% of next month's production and batteries will be required. So 30% of, sir, 6250. No, 6250 is electronic gadgets. In next month, I will require a battery of 12,500 and I will keep 30% stock in closing stock in January. So it will be 12,500 into 30%. 3750. You getting it? What is production requirement or what is the batteries requirement for next month's production is 12,500. You will say no sir, next month production is 6250. But to manufacture 6250, 12,500 batteries will be required and 30% you will be keeping it in previous month stock. In similar manner, it will be 14,250 into 30%. 14,250 into point. It is 4275. And I know April figure also, right? They have not told us to find out, but I know April figure. It is 7625 multiplied by 2. 15,250. So closing stock required will be 30% of this. Four, 5, 7, 5. What will be opening stock of February, closing stock of January? 3750. Opening stock of March will be closing stock of Feb. 4275. I want only January, February, March. I can just total it. $11,100. $13,025. $14,500. There is another question also in this particular question, which is prepare purchase budget of the batteries which we have purchased. Calculate the profit for quarter ending of March. Quarter ending of March is Jan, Feb and March. How much sales we will be doing in Jan, Feb and March? Sales will be 5,000, 6,000 and 7,000. 5 plus 6 plus 7 will be 18,000 units. What will be selling price per unit? It is 2,000 minus 15%. Which is 1,700 rupees per unit. What is the total cost per unit? 1,500. It is not variable or fixed, it is total cost. What is profit per unit? 200 rupees per. So my profit will be 18,000 units multiplied by 200, which is 36 lakhs rupees. A simple question. Now you will say me, sir, in January, February and March we are purchasing this many batteries. That is not important. We want to find out the profit. What was our sales? That is 18,000 units. What is our cost of sales per unit? 1,500. Selling price per unit 1,700. This will be my profit. Total profit of Jan, Feb and March. That is quarter ended of March. This was 15.3. Again, this is a production budget, but nicely drafted question. May 2018. $15.4. AB Manufacturing Company manufactures two products A and B. Both products use a common raw material C. The raw material C is purchased at a rate of rupees 45 per kg from the market. The company has made estimate for the year 31st March as under. Product A, product B. What are product A, product B? They are raw material or finished goods? They are finished goods. Raw material is only one, C. So both products are manufactured from raw material C. Sales unit are 36,000, 16,700 and it is for the year ended. So the budget is for full year. Finished goods stock increase by year end in units is 860. Alright, that we'll be doing. Post production rejection rate in percentage is so and so. Material C per completed unit net of wastage required is this. Material C wastage in percentage is so and so. Additional information available is as under. Usage of raw material C is expected to be at a constant rate over the period. Annual cost of holding 1 unit of raw material C in stock is 9% of the material cost. The cost of placing an order is 250 per order. You are required to prepare functional budget for the year ended 31st March under the following categories. Production budget for product A and product B. Purchase budget of raw material C. This will be doing. Calculate economic ordering quantity. Still we have not done a purchase or a raw material or material chapter. So we will not be able to do EOQ, but other points we will be easily able to solve. We are first going to production budget. Production budget is of finished goods. So how we do our production budget, try to concentrate. The finished product is A and B. So production budget will be of product A and product B. There is a universal rule of doing a production budget. It is your required sales plus closing minus opening. This much production you need to do of product A and product B. Here it is per annum, so we need not worry about Jan, Feb and March and so on. So what is expected sales of product A? 36,000 units. What is expected production of sales of product B? 16,700. Now, the problem is opening stock and closing stock are not given. But what is given is this. Finished goods stock increases by year end of 860 units. See, what does this mean? If opening stock is 10,000, closing stock will be 10,860. Sir, how you came to know that opening stock is 10,000? We have just assumed. If opening stock is 5,000, closing stock will be 5,860. This is what it means. Finished goods stock increases by year end in units by 860 units. Now, what we want in our chart? Closing and opening. But if both figures are individually not available and the balance is available, see, ultimately closing is added and opening is subtracted. Closing is added and opening is subtracted. But I know that difference between opening and closing is 860. I can write down 860 over here. See, here also closing minus opening will be 860. Closing minus opening will be 860. So it is given in intelligent manner. Rather than giving opening and closing stock, what they have done, they have told that this much higher is your closing stock. So 860 higher. So I have added 860. Here similarly 400 will be added in product B. Don't say closing stock is 400. Don't say opening stock is 400. What they are saying, closing stock is 400 higher than opening stock. And it will suffice our calculation. Why? we want closing minus opening. All right, if both figures are not available. So how much production I will have to make? 36,860 and this is 17,000. But there is one problem. Concentrate. Post production rejection rate percentage is 3%. What does it mean? If you start manufacturing 100 units, your rejection rate will be 3% and you will be able to manufacture only 97 units. So, to manufacture 97 units, you will have to manufacture 100 units. To actually manufacture and sell 97 units, you will have to manufacture 100 units because 3 units will be rejection per 100 units. So, how much production you want to sell? 36,860. Sale plus closing is 36,860. But you will have to manufacture something more because 3% is always rejected. Say I am doing this cross multiplication. If 100 units are input, 3 is rejection rate and 97 units are manufactured, I want manufacturing of 36,860. I can just cross multiply this, I will be getting the answer. Actual production required will be 36,860 multiplied by 100 divided by 97, which is 38,000. Let us just verify. If I manufacture 38,000 units, I will be always losing 3%. So how much I will be losing? 38,000 into 3%, which is 1140. From 38,000, I will be losing 1140. So what actually I will be manufacturing is 36,860. So actual production required is 38,000. Here also there is a rejection rate of 5%. So rejection rate of 5%, I will be doing cross multiplication like this. 100, 5, 95. This is 17,100. What should be 100? 17,100 into 100 divided by 90. So it is 18,000. So 38,000 units of A will be manufactured. 18,000 units of B will be manufactured. Yes, after wastage, actual production will be this. But you will have to manufacture 38,000 units and 18,000 units. This is the production budget. We are going to raw materials budget. Raw material is only one, C. Which is C. Raw material required for manufacturing of A. Material C per completed unit net wastage is 4 kg. So if you want to manufacture 38,000 units of A, multiplied by 4 kgs will be requirement for raw material C to manufacture 38,000 units of A. Now we should take 38,000 or we should take yes, they have written net of wastage. So what will be the raw material requirement for manufacturing A? 38,000 into 4 is 1,52,000. What is 1,52,000? It is not rupees, it is kgs. This much kgs of raw material C will be required to manufacture A. Raw material required for manufacturing of B. How much B we are manufacturing in current year? 18,000. That is next year 18,000 units. and raw material required will be 5 kgs. This will be 90. Which is 90,000 kgs. How much raw material will be required to be purchased in next year? Which will be 1,52,000 plus 90,000. 2,42,000 kgs. Raw material required in next year or budgeted year will be 2,42,000 kgs. Now sir, what is opening stock of raw material and closing stock of raw material? Because we do this, plus closing stock minus opening stock, this will be my purchase. But in our full question, nothing like this is given. Usage of raw material C is expected to be at a constant rate over a period. Annual cost of holding, this is something else. So no opening and closing information is given. So we are assuming that opening and closing stock will be 0, or opening and closing will be same. So whether opening is 10 and closing is 10, it will not make any difference because the answer is going to remain same. So how much you will be purchasing? 2,42,000 kgs raw material you will be purchasing, and the purchase price of raw material is also given. Yes, there is a wastage in raw material also. Okay, we have not considered it, we should consider it. There is 5% wastage in raw material and 4% wastage in raw material in B. So in raw material also we will have to do the same thing. So we'll have to change our answer somewhat. So raw material is required for A and B both. Before wastage, it is 152,000 and 90,000 in kgs. What is wastage percentage? 5% and 4%. So how much you will have to purchase of raw material A? Purchase raw material to manufacture 38,000 units of, actually you need to purchase 152 kgs of raw material, but there is a 5% wastage in raw material also. 100, 5%, you get only 95. You want 1,52,000, how much you should purchase? 1,52,000 into 100 divided by 90, 1,60,000. See, if you will purchase 1,60,000, your wastage will be 5%. You will be actually getting in your hand 1,52,000. From that, you will be manufacturing 38,000 units of A. And B, same manner, right? Now, if you want shortcut, I'll give you, it is 90,000 divided by 96%. It is 93,750. And the answer will still remain in kgs. Total raw material to be purchased is 1,60,000 plus 93,750. 253,750. Raw material to be purchased. Just for understanding, let us go step by step. How much raw material you are purchasing of C as far as for product A is concerned and product B is concerned? Purchase of raw material C. You are purchasing 1,60,000 and 93,750. 750 but kgs, right? There will be loss in raw material. How much loss will be in raw material? 5% and 4%. So here 5% is 8,000. 4% will be, let me do it, 93,750. This is just for explanation. 3,750 will be my loss in raw material. This will be 1,52,000 kgs. This will be 90,000 kgs. And still we are talking about raw material C. How much you will be getting net? 1,52,000 kgs and 90,000 kgs. From 1,52,000 kgs, how much of finished goods will be manufactured? 1,50,000. Now, what is the rate of finished goods? 4 kgs. In 4 kgs, you can manufacture 1 unit. So, in 1,52,000 kgs, you can manufacture 152 divided by 4 kgs. That is 38,000 units. Now, we are talking about finished goods. And here it is 5 kgs. 5 kgs of raw material C is required to manufacture a finished goods. So this will be 90,000 divided by 5. 18,000 units. 38,000 units of A will be manufactured. 18,000 units of B will be manufactured. But there is a loss in finished goods also, which is 3% and 5%. So 38,000 into 3% will be lost. That is 1140. And 18,000 into 5% will be lost. That is 900. How much you will be actually getting? 17,100 units of B. And this will be 36,860 units of A. What you will be doing with the 36,860 units of A? You will be selling 36,000 and remaining will go in increasing your closing stock. From 17,100, 16,700 will be sold, and remaining 400 will increase the stock. Are you getting it? This is understanding of the question. This is what is actually happening in the industry. You are given some figures and you are told to find out other figures like this, and these figures are to be found out. But this is what is actually happening. This is overview of the question. Once you understand this, the question becomes extremely easy. This is 5.4. We are not doing this calculation of economic ordering quantity. After raw materials chapter, you can easily solve economic ordering quantity. Just for your reference, EOQ is under root 2AO divided by C. By this formula, you will be finding out EOQ. This was 15.4. We are going to 15.5. Again, it is a good question. It is of flexible budget. You are given the following data of manufacturing concern. Variable expense at 50% capacity. Semi-variable expense at 50% capacity. Fixed expenditure. The fixed expense remained constant for all level of production. Semi-variable expense remained constant between 45% and 65% of capacity. where it increases by 10% between 65 and 80% of capacity, and by 20% between 80% and 100% of capacity. Sales at various level are as under: at 75% capacity and at 100% capacity. Prepare flexible budget at 75% capacity and 100% capacity. All right, I'm just preparing first current scenario. Statement showing flexible budget and current situation is at 50%. You need to prepare it for 75% and 100% capacity. Proposed 75%, proposed 100% capacity. So this is my I want variable cost. Currently, what is given? It is material, labor, others. I want a total of this. It is at 50% capacity. So total will be 48 lakhs plus 51.2 lakhs plus 7.6 lakhs. That is 106 lakhs 80,000. All variable cost at 50% capacity. What is semi-variable? Again, I am doing total. Semi-variable is this. It is 5 lakhs plus 19 lakh 80,000 plus 5 lakh 80,000 plus 5 lakh 20,000, which is 35 lakh 80,000. 35 lakh 80,000. What are my fixed cost? Third is fixed. Fixed cost will be total of this four, which is 16 lakh 80,000 plus 11 lakh 20,000 plus 14 lakhs plus 17 lakh 80,000. 59 lakh 80,000. And this is total cost. Let me change the color. This is the total cost at 50% capacity will be 106.8 lakhs plus 35.8 lakhs plus 59.8 lakhs, which is a 202 lakhs 40,000. Will be my total cost. Now we have done marginal costing, so this becomes extremely easy. At 50% capacity, if my variable cost is 1 crore 6 lakh 80,000, at 75% capacity it will be just cross multiplication. Variable cost proportionately increases with increase in production and sales. So what will be at 75% capacity? Variable cost will be 1 crore 6 lakh 80,000 multiplied by 75 divided by 50. It is 1 crore 60 lakh 20,000. 1 crore 60 lakh 20,000. Similarly, 100%. Sir, should I do cross multiplication with 75 or 50? You do it with anyone. Your answer is going to remain same. At 100%, your variable cost will be 21 It is 106 80,000 multiplied by 2, right? At 50%, if it is this, double will be at 100%. It is 213 60,000. We all know fixed cost remains the same irrespective of level of capacity you are running or irrespective of production. So it will remain 59,80,000 in all scenario. Semi-variable. The information should be given about semi-variable. Let us see what information is given. The fixed expenses remain constant for all level of production. Semi-variable expenses remain constant between 45% and 65%. We want 75 and 100. Whereas it increases by 10% between 65 and 80%. So variable cost at 75% will increase by 10% from this. 35,80,000 plus 10% plus 3,58,000, which is 39,38,000. 39,30,000. What will be at 100% capacity? They will have to tell us. We cannot just do cross multiplication. And it will increase by 20% between 80% and 100%. So 80% as compared to 75% or original figure? Original figure. It will increase by 20% from 35,80,000 plus 20% is equal to 42,96,000. I have got a total cost at all level of capacity. I just need to total it. 160.20 lakhs plus 39.38 lakhs plus 59.80 lakhs. It is 259.38 lakhs. This will be 213.60 lakhs plus 42.96 lakhs plus 59.80 lakhs. 316.36. So we are just finding out variable cost, semi-variable cost and fixed cost, and we got the total cost. They have also given the sales. Sales at 75% capacity will be 2 crore 40 lakhs. Sales 2 crore 40 lakhs and 3 crore 20 lakhs. I can even find out my profit. Sales minus this will be 19,38,000 loss. This will be 320 lakhs minus 316.36. 3,64,000 profit. Now, whether it is required to write down all the figures in examination, the answer is no. You can just present it in this manner. So, flexible budget is extremely easy point. 15.5. This is 15.6, right? We are going to 15.6. G Limited manufactures a single product for which market demand exists for additional quantity. Present sales is 6 lakhs. Utilize only 60% capacity. So rupees 6 lakhs is 60% capacity of the plant. The following data are available. Selling price is 100, variable cost is 30, semi-variable expense 60,000 fixed and 5 per unit is variable. Fixed expense 1 lakh at present level estimated to increase by 25% at and above 80% of capacity. You are required to prepare a flexible budget so to arrive at operating profit at 60%, 80% and 100% level. We are drawing flexible budget. Again, extremely easy sir. At 60, 80 and 100% level. 60 is current level, right? 60%, 80%, 100%. This is capacity level. What is sales at 60% is 6 lakhs. What is selling price per unit? 100. So how many units you might have sold? It is 6 lakhs upon 100, which is 6,000 units. So at 60% capacity, you are selling 6,000 units at the rate of rupees 100. So you are doing sales of 6 lakhs. At 80% capacity, you will be selling 80,000 units. At 100% capacity, you will be selling 10,000 units. I don't think there is any change in selling price. So sales will be 6 lakhs, 8 lakhs and 10 lakhs. Minus variable cost. Variable cost is 30 per unit. So this will be 1,80,000. This will be 2,40,000. This will be 3 lakhs. Minus semi-variable. Semi-variable is having two portions, fixed and variable. What is fixed? 60,000 rupees is fixed. And 5 rupees is variable. And this will be 10,000 into 5 will be 50,000. Now if you will see this total, it is neither fixed nor variable. So they are termed as semi-variable. And there are other fixed cost, which is 1 lakh at present level minus fixed. It is 1 lakh at present level and estimated to increase by 25% at and above 80% capacity. So this is at 80% capacity, it will increase by 25%. So it will become 1,25,000, and at 100% capacity also it will remain 1,20,000. These are better termed as step fixed cost. It remains fixed up to a level, then it increases. All the expenditures I have considered, sales minus variable cost minus semi-variable minus fixed, will be nothing but my profits. You just need to calculate the total. It is 6 lakhs minus 1.8 lakhs minus 0.6 lakhs minus 0.3 lakhs minus 1 lakh. It is 2,30,000. This is 8 lakhs minus 2.4 lakhs minus 0.6 lakhs minus 0.4 lakhs minus 1.25. It is 3,35,000. This is 10 lakhs minus 3 lakhs minus 0.6 minus 0.5 minus 1.25. 4 lakhs 65,000. And this is nothing but presentation of my budget, which is flexible. Why? We divide fixed variable, we proportionate variable to all the capacities, and we write down same amount of fixed, and we just present the budget, which is termed as flexible budget. We are getting even correct answer. This is 15.7. PSV Limited manufactures and sells a single product and estimates the following related information for the period November to March. So it is November, December, Jan, Feb and March. Opening stock of finished goods in units, sales in units, selling price per unit, additional information, closing stock of finished goods at the end of March 2021 is 10,000. Each unit of finished output requires 2 kgs of raw material A and 3 kgs of raw material B. You are required to prepare the following budget for the period of November to March on monthly basis. Sales budget. We have never prepared sales budget. Let me prepare sales budget for all 5 months. Try to concentrate. Sales budget I need to prepare for November, December, Jan, Feb and March. November, December, Jan, Feb and March. Sales in units. What are sales in units? 7,000. No, it is 30,000, 35,000. 38,000, 25,000 and 40,000. My selling price per unit in every month changes. So it is selling price per unit. 10, 12, 15, 15, 20. It is selling price per unit. Same product every month it changes. What will be my sales? This will be 3 lakhs. This will be 420. This will be 5,70,000 in rupees, right? $3,75,000. This will be 8 lakhs. And this is nothing but my sales budget. What will be my sales in November, December, Jan, Feb and March? What will be selling price? And how many rupees sales I will be doing in all this month is nothing but my sales budget. I am going to do production budget because it is required. Production budget in units. Production budget in units. So how I prepare production budget? Very simple. Sales plus closing minus opening will be nothing but production. I need to prepare it for November, December, Jan, Feb and March, and all the figures will be in units. Sales in units, I can copy it from upper chart. 30,000, 35,000, 38,000, 25,000, 40,000. I think opening stock is given. Yes. Opening stock of finished goods of each month is given. Opening stock is 7,500 of November, 3,000 of December, opening of Jan is 9,000, opening of Feb is 8,000, opening of March is 6,000 units. Opening of December is closing of November. So opening of December is closing of November. Closing of November will become opening of December. So this will be 3,000. Opening of Jan will be closing of December. 9,000. 8,000. 6,000. Opening of March will become closing of Feb. I think I can find out November production. 33,000 minus 7,500. 25,500. December 41,000 minus 3,000 is 38,000. No, this is 35, 44, for this is 41,000. This is 46 minus 9, 37. 31 minus 8 is 23. Yes, closing stock of March will be given in the question. Closing stock of finished goods as on March is 10,000 units. So this is 10,000. 50,000 minus 6,000 is 40. So production budget also extremely easy. All the figures are given. You just need to put in the figures and find out the production budget. What is difficult is somewhat this. It is not difficult, but just calculative. It is somewhat lengthy. Each unit of finished output requires 2 kgs of raw material A and 3 kgs of raw material B. Raw material price is not given. Raw material budget for raw material A and B separately in units for all the months. So it is the raw material budget of raw material A. Raw material budget of raw material A. How much production is required in November, December, Jan, Feb and March? November, December, Jan, Feb and March. How much production of output is required? It is 25,500. We have found out in previous chart. 41,000. January is 37,000. Feb is 23,000. March is 44,000. How many kgs of raw material A is required to finish the output? 2 kgs of raw material A is required to manufacture one output. So how much kgs of raw material A will be required? Output multiplied by 2. It is 25,500 into 2. It is 51,000. This is 82,000. 74,000. This is 46,000 and 88,000 units of raw material A will be required for this all months. 51,000 units of A will be required in November, 82 in December, 74 in Jan, 46 in Feb and 88,000 in mark. Now no need to total it out. How much raw material B will be required? 3 kgs of raw material B will be required to manufacture a unit. So it will be multiplied by 3. 25,500 into 3. 76,500. 41,000 into 3. 1,23,000. 37,000 into 3. 1,11,000. 23,000 into 3. 69,000. 44,000 into 3. 1,30,000. This many units of raw material B will be required. Sir, this is raw material purchase budget. Yes, we are assuming we don't carry raw material. Neither there is opening stock nor there is closing stock. And if there is opening and closing stock, they are equal. If raw material stock is given, we will have to deduct closing and we will have to add opening. Sir, opening stock is given. It is not given of raw material. It is of finished goods, which we have already considered. In raw material, if nothing is given, we will be assuming there is no opening as well as there is no closing.